bearish or bullish, Bitcoin dominance holds or increases in 2026?
Overarching prediction is that crypto is going to get hard again.
Now that the regulatory environment is a lot more favorable and the IPO window is open, I think there's a set of late-stage crypto companies that have been waiting for their moment.
Welcome, everyone, to Stateful, the Pantera podcast. We have an amazing episode for y'all today. We have two very special guests. We have Hootie Rashidifard, managing partner at Hash3, an early-stage crypto fund, as well as Alana Levin, investment partner at Variant, a former colleague and early-stage investor. Before we get started, nothing we say here is financial or investment advice. The views here expressed are at the sole discretion of the individuals here, not representative of the firms or their employers. We have an awesome lineup today. We're going to talk about some 2025 winners and losers. We're going to get into things that we're bearish and bullish on. We're going to hopefully talk about some 2026 predictions. Some will hopefully be spicy. Others maybe I think everyone will agree with. And then it'll be fun. But maybe a good place to start is the timeline. What's been happening in the markets. Coinbase very recently announced a slew of product updates. They announced prediction markets, stock trading, perps and equities trading, as well as some commodities perps. They talked about full DEX integration, some stablecoin payments features, a new Coinbase advisor that's like a robo-advisor that's going to tell you exactly how you're going to lose or make money on Coinbase, as well as the more formal announcement of their token sale protocol. When I look at these announcements, the actually one that I was most excited about was the increase of the borrow and lend limits for BTC, as well as the expansion to other products. I just think there's like such a massive gap in the market there ever since the BlockFis of the world went under. And so that personally to me is the one I think has the most, let's call it like growth potential. But what do you think was like the most significant announcement that they announced recently?
I'll jump in. I kind of agree with the one that you picked in that all of the other ones were like not surprising. Like you could kind of look at what people anticipated they would do. You could look at like other financial home type products in the market. You could look at what Robinhood was doing. So, oh, Coinbase is probably going to do that too. Coinbase announces something, then Robinhood says, we're going to do that too. And Robinhood announces something, and Coinbase says, hey, can I borrow your homework for a sec? Let me try that one out. But like the fact that borrow and lend limits are increased now, I think means people can start to do a lot more like real financial stuff on chain. You can borrow and feasibly take out a mortgage on a home or an apartment or something, which I think is really cool. And it's like a way to make crypto more productive in the world. So that was probably the one that like stuck out the most as it like maybe a little under the radar, but pretty exciting.
Yeah, I think that product is really nice. And you have to remember 4 years ago, lending products is what got us into a lot of trouble. And the hope is that because Coinbase should theoretically be smart about this and they've survived nearly over a decade at this point, 13 years is what Armstrong said on that. Yeah, they like should think about like lending limits and not having all of this stuff looped and the potential for it to explode. I will say like the announcement overall, like solidified the idea that everything is going the same direction. If you look at obviously Robinhood, which Alana brought up, but there's a bunch of other like DraftKings and all these others like launching their own prediction markets, and everyone's trying to play for the super app. I think like the thing in my mind is just how important distribution is, right? It's like the ones with big distribution are going to be the ones who are winners. And Alana brought up Robinhood and how Coinbase is to some extent copied what they're doing. It's, in my opinion, is like way easier to go from like people trading stocks to people trading crypto or re-architecting your infrastructure to be more efficient. I think it's much harder to go from like people trading crypto to people trading stocks, like just as a from like a market size perspective is like much more difficult. But
So do you think that distribution is going to translate then? Because I have a similar concern where like borrow and lend, I think translates really well because people already have assets. They want to get leverage or more use out of them. But prediction markets, for example, like most prediction markets betting is sports betting. I don't necessarily see the Coinbase user persona as the person who also wants to do their sports betting there. So yeah, how well do you think that distribution necessarily translates to product expansion here?
lending is actually not that great of a product, right? If you look at lending companies and like how they trade, they're actually on a pretty low multiple. Whereas if you look at Coinbase's business, like as an exchange, and especially how much they get off their retail customers, like they're generating about 150 to 200 basis points off retail customers. If you can create more products that are high value like that, that's going to be even better for you. And then there's a whole lock in there. If you can generate liquidity, then you can get more liquidity, you can get more users, get more depth, you get better pricing, all that sort of stuff. Like lending is like it's great because it makes it more sticky for your customers, and it's a reason why your customers can stay around, and it's a reason maybe to some extent you can increase volumes because people are taking out loans and then they can either trade more or do other things with that capital, but it's actually not that, like, in my opinion, it's like not that great to generate enterprise value.
I think there's also like an interesting question as to like in the past, assets at rest and then like actively traded assets have lived in two separate apps for people. So like you have your bank account with like assets at rest, and then you have a Schwab or Fidelity account where you're maybe trading assets, and then that graduated into Robinhood or Coinbase or SoFi or some of the other apps. And it seems like many of the like super apps that Hootie mentioned are like trying to merge those two things back into one platform. I don't know if that actually makes a lot of sense. Like, I don't know if I want to be trading like actively in the same place that I'm looking at like all of my dollar deposits that are earning yield, or like where I'm repaying like a mortgage on a home or something. There's almost like a maybe this is just me and my personal preference, but I feel like there's a little bit of mental stability of separating it out, creating like different accounts and saying, okay, this is my like fun experimental bucket and this is like my safety net. And I don't know, it feels there is some tension to having it all in one app.
Yeah, I hear you. I think I'm probably in the opposite camp. Put it all into Robinhood. Let me have my mortgage. Let me have my high yield savings and trade anything I want to from there.
If
I hear you on the peace of mind.
if there's anyone from Robinhood listening to this, I love Robinhood. I would do it all in Robinhood, or so fan of that too.
You're both early stage investors. Can't have you on without talking about maybe some of the things you're excited about from an early stage perspective. If I look at the four major horseman trends of the past year, it's really been stablecoins, it's been tokenization, it's been prediction markets, and it's been perps. Those have obviously driven a ton of excitement, volume, fundraising, investment into the space. Which of these are you most excited about? Or if it's none of them, feel free to pick a fifth category.
Yeah, I can kick it off. I'll just give you like my worldview in terms of like how I look at the landscape first. I think like opportunities really fall into two buckets. You have one end of the spectrum where you have like very crypto native opportunities, things that are like Polymarket in the very early days or Pump.Fun in the very early days. These are products or services that uniquely leverage crypto to provide either a fun experience or a new type of product or something fundamentally new. And those are going to pop up through founder experiences and the founder insights and what they think should exist in the world. And that's rather difficult to be like, okay, that's what I'm going to bet on for the next year. That's what I think is going to happen. You just have to talk to a bunch of people and get excited about something that they're excited about. And then on the other end of the spectrum, you have like very unsexy, by comparison, very unsexy categories that are rather large that are going to use crypto rails to make products that are cheaper and faster. And you're going to have a lot of competition from incumbents, and a lot of the categories that you name, stable coins or RWAs, are in that category. Maybe perps is like a uniquely crypto thing that has now expanded beyond crypto, and that's exciting too. But then you have this like unsexy category. And so like for me, like a lot of the categories that you mentioned, if they are hot categories, they've generally been funded and they've probably been after the stage that we're funding. So like we're trying to identify things that are like what are going to be the next things that either fall into these two buckets, and could be, you know, some crypto native thing that we don't really know yet, or it could be some new category or some new market that has been underexplored, like using leveraging crypto rails. And so like it's what we look for. I guess that's like a sort of a non-answer in any of those categories, but maybe it falls under RWAs. Like RWAs, like new RWAs could fall under that latter category. And then what is the next perps product, or what is the next prediction market product? That would be under like the crypto native category. And that's a lot harder, in my opinion, to judge what that is.
Alana, do you feel similar in that there's been a lot of investment go into these four categories, and so the like marginal investments to be made are less exciting at some of these, I'll call them like hot categories or well-funded categories?
I think you can almost split it into two buckets, which is like one, yes, there has been a lot of investment dollars going into these categories. And so the question is like, what are the second order opportunities that emerge? Like I think prediction market prime brokerages are a really interesting opportunity where they aggregate and manage risk across different prediction market venues. Maybe start to think about trying to add leverage or other sort of risk management type things. So that's like an example of a second order opportunity. The other thing that could still be true though is like many of these markets, like perps markets, still super early. When you think about the history of just any type of exchange. Like the two things that create opportunity for new exchanges to emerge are like bull markets, so just growing the total size of the pie in terms of volume. And I think when you look at something like perps, there's probably going to be a lot more perps activity in 10 years than there is today, 5 years than there is today. And then just like new things to trade or new assets, new products. You can get that sort of to Hootie's point of what are the founders thinking about tokenizing next or creating next. You can get it from taking off-chain products and putting them on chain. Like I think Athena was a really interesting sort of new product that rhymed with a lot of traditional things, but you add like a 3 or 5% difference and all of a sudden it's like an original new innovative product. And so I would say again, like roundabout way of answering, like there's been a lot of investment dollars. That doesn't mean that the categories are like done, dusted, and finished. Still a lot of opportunity there. But if I had to pick like one of the 4 buckets, tokenization probably seems like the most broad and the most set of stuff that like you can continue to put more and more value on chain. And it creates the most second order opportunities as well. So that's maybe like where I would plant my flag.
Not to steal the mod seat maybe, but I look at AI maybe as a slight corollary to this. Like in AI, there's a ton of investment going into AI, like companies, both at seed stage all the way up through. It's like, okay, Dev from OpenAI leaves and gets like a $5 billion seed round or whatever. But my point is like, if you think about all these venture dollars that are going out the door, like at the end of the day, they need to come back in terms of returns, right? Ultimately to LPs or to someone, but they need to come back in terms of return. And the way I think about that is like, maybe if you go back to the inception of the internet is okay, you invested like whatever $5 million into Google, but you also invested like whatever $10 billion across other companies. Like that $5 million in Google paid back for everything plus way more, right? And the question that I have today is okay, all these dollars going out for AI, and similarly, all these dollars going out for these like crypto opportunities in like stable coins or RWA, do incumbents just take the enterprise value increase? So let me just use AI as that example. Is like you had $100 billion going to AI companies. I'm just making these numbers up. Does Microsoft's stock price going up 5%? So what is it like Microsoft's $2 trillion market cap? So it goes up 5%. Is that the majority of the quote unquote gains of the category? But that's never rewarded to investors, right? That's never rewarded to venture investors. It's rewarded to Microsoft shareholders. So the question is, does BlackRock, Van Eck, Fidelity, maybe even you can consider like MasterCard, Visa, do these companies become the winners of tokenization and RWAs in our category, and venture investors are just stuck holding the bag?
Right. I think the maybe less nice way to phrase it is incumbents just cook every venture investor in this category. And I think this is like the perennial question to ask in some of these perps, maybe less so. To your point, it's like more crypto native product, but like stablecoins, tokenization. Where are incumbents well suited to win the gains, whether it's like from market cap increase, revenue increase, margin increase, versus where the net new business is? And I'm curious, like, how you evaluate that. Like, stablecoins is like a really easy example of distribution wins in terms of like issuance and being able to really control that. And so issuance becomes like a much tougher business moving on a go forward basis. Alana, I'm curious, how do you evaluate where incumbents are poised to win and capture value versus like where the net new startups can be funded and emerge?
When I think about where value accrues or value gets captured just broadly, it's anywhere there's a scarce resource in the stack. And so I think about what are the scarce resources that the incumbents own versus what would be like pretty challenging for them to try and capture or build around. The reasons that like they could encounter difficulties could range from maybe it's just too slow, maybe there's some like regulatory or risk or compliance barrier that they don't feel comfortable embracing as a very large company, but like a startup founder may very well be willing to embrace much earlier on in the product life cycle. Maybe they just don't feel like allocating the resources to something because it hasn't been proven out yet. And so that's like a loose framework of the set of questions that I'll ask. I do think there used to be this perennial question in venture of what if Google does this as it related to any software business ever? And then you saw billions, if not trillions, of value get created in net new software businesses. And I think the same thing might be true to some extent in crypto, where it's like, what if one of these massive centralized exchanges just builds this? Or what if one of these like giant payment processors builds like stablecoin white label issuance? And the answer is maybe custom stablecoins are not like a greenfield opportunity for startups, but all of the second order effects of every single payment processor having their own custom stablecoin infrastructure creates some emergent opportunity for startups. And it's really hard for any individual payment processor to go after that because they're like constrained by the fact that like other payment processors don't want to work with them. So I really think about it as what are the scarce resources in the stack? What are the barriers to the incumbents capturing those resources? And then how might a startup go about building those or building sort of paths to capturing those resources?
Yeah, I do think the silver lining is that you have a lot of people, a lot of incumbents focus on the space and they're well capitalized and they're generally sitting on a lot of cash. And so that makes a ripe, like, potential M&A environment. And you've already seen some of that. Historically, all crypto M&A happened from exchanges. So it like pre 3 or 4 years ago, right? It was like Coinbase or Binance being acquisitive, and generally maybe there were smaller acquisitions, and there was basically no IPO window outside of Coinbase. And I think now you're seeing, like, you saw MasterCard and Zero Hash. Coinbase is doing even bigger acquisitions now. You saw Circle IPO.
I
So
think Coinbase is still the leading acquirer for 2025.
yeah, probably. Yeah, I think Coinbase just ahead of the eight ball on to use Alana's words, like the scarce resources, right? Or acquiring those things. But at least they're acquisitive, right? You look at JP Morgan or some of these other things. If they're going to need to buy, at least they have the cash to do it. It's not like they don't have the cash. You have the green light to begin with.
Yeah. Okay. I think that is maybe a good segue into winners and losers of 2025. And I can maybe start with like category winners for 2025 and kick things off. I actually put incumbents. I think incumbents are big winners of 2025, whether it's your exchanges, whether it's your Stripes of the world. I think they've done a really excellent job getting ahead of where the puck is skating, making really savvy acquisitions. Even like Robinhood is in that incumbent category where they've been very like very passive on crypto the past couple years and then decide, oh, there's regulatory clarity, we're going to move into the space in a big way and capture a lot of the value. And so I had them as one of my category winners of 2025. Who is one of your category winners of 2025?
My category winner was stablecoins. It's a crazy reminder to think about where stablecoins came from. Like, USDC launched in the summer of 2018, and I think in its first month did like maybe 30 million of volume or something. And any month in 2025, it was over like a trillion of volume, right? So it's a crazy growth rate that has occurred. Tether is the most profitable company on the planet per employee. And maybe that's going to change as interest rates go down. I don't, it's definitely top of mind, but a lot of these companies were funded for a period of time and they were very unsexy. So like in 2022, 2023, like no one was like touting their stablecoin funded project as like the cool thing in their portfolio. And I think now that these companies, and there's a lot of these companies that are generating, some of them are generating 8 figures a month of revenue and they're quite large and growing very quickly. I think like people are like, oh wow, that's a really sticky, interesting business. And not just because it generates revenue, because it actually provides value to some end customer, right? So I think like Felix Pago is one of the winners in that leverages stablecoins for remittances in the space. And like their users are actually getting money faster, it's getting settled faster, they pay lower fees. And so you compare something like that versus a Western Union. It's feel good, right? It's, oh yeah, that's like what crypto's for, is not like for all of these other things that like are potentially shady or cause people to look down on the space. And
We
I
love
think
a
that,
feel good winner.
yeah, we need one, please. 2025. We need one.
How about you, Alana? Who is the winner of 2025 categorically?
I put prediction markets. When you think about where they were a year ago or a little over a year ago, like pre-election, there's a lot of questions as to, was the volume wash trading? Were they only good for betting on elections? Would the activity persist and sustain? Would there be more prediction market players, or was it basically just Kalshi and Polymarket? I think a year ago, both Kalshi and Polymarket were under $1 billion valuations. And then to see something like the Intercontinental Exchange invest $2 billion into Polymarket this year, that's like mind blowing. Kalshi has raised a ton of capital too. I think these are some of the fastest growing companies that are like out in the market today. And there's still some open questions as to what other markets are tradable, but you've definitely seen tailwinds across the board in a way that would have frankly been like really hard to predict a year ago.
Yeah, absolutely. I think that Prediction markets have obviously had their time in the sun this year as one of the dominant categories. I think we've seen that obviously from Kalshi and Poly Market, as well as there's a ton of early stage investing happening at that space just because of those two incumbents now. Okay, how about moving on to specific winners, whether it's like companies, assets of 2025? Hootie, I'll let you start this time.
Mine was Robinhood. We already talked about this before, but Robinhood has just done a great job as a, I would say, a non-crypto native public company, like Coinbase being the crypto native analogy, has done a really good, really impressive job of embracing crypto. And this is like another feel good story of, oh, this is what crypto can do. It can make markets more efficient, and it can do that even from the perspective of they're tech forward for sure, but not a crypto native company. They've had crypto trading on there for whatever 5 years at this point, but it's not they've that was their sole market to begin with. And then if you look at performance of that asset over the last year, I think it's up 3x since year to date, if I'm correct, like up 200%, maybe a little bit more. And Coinbase was down 5% year to date. And they're both very obviously converging on the same product suite. Maybe Coinbase a little bit more with the lending stuff, but getting close there. Yeah, I think the like Vlad's mission and pace of execution has been like unstoppable in 2025.
They've had so many events this year too, like extraordinarily well executed. I like set reminders as though I was watching like my favorite TV show. I'm like, all right, gotta tune in.
Yeah, they do make it like a TV, like they make it like a sports press conference, like post NBA game. They're like sitting at a desk and have the background. So they make it entertaining, which is I guess part of their product too. So
I'm all for that. Bring some more entertainment to earnings calls. They should be fun.
I had two. Polymarket was the first one, just because I think a year ago Shane was tweeting about like the FBI raiding his apartment, and now like Polymarket is live in the U.S. and has done like an incredible job so far. The other one that I had was Stripe. They have been like so far out in front of other payment service providers or payment companies in terms of really embracing crypto and building like strategic acquisitions. They've bought some of the best stablecoin companies and sort of infrastructure companies in the space. Seems like they've done a really great job, like integrating Bridge, integrating Privy, but keeping them like still as relatively autonomous organizations within Stripe broadly in a way that like, I don't know, I've just heard from so many people that they love using Stripe crypto now. And so kudos to Stripe and the team there. It seems like they, at the time, I remember people were like, wow, $1 billion for Bridge with whatever the revenue was at the time seems like a crazy multiple. But when you think about the synergies that are brought to Stripe and their ability to just execute so much faster than some of the other players, it's been like a huge winner.
I think I remember you saying on Twitter that Bridge sold too early. Do you 12 months later still believe that?
So I think I compared it to like the Instagram acquisition by Facebook in that Facebook acquiring Instagram was an incredible business move from Facebook's part. I think the same is true of Stripe acquiring Bridge. The team at Bridge, Zach, Ben, many of the others, I think they could have built like a multi-billion-dollar business, sort of had they stayed independent. I'm sure like either way, it seemed like it does seem like they did just fine by selling the business for like over
Yeah,
$1 billion
no one's
a couple yeah, like a couple years into building it. But I do think that that team had the caliber and quality to like really go and swing for the fences.
people that sold to Facebook early, like WhatsApp, right? It depends how it's financed, right? If you get bought in cash, then you obviously it's cash at the time of the acquisition, but a lot of times it's funded by stock. And like Facebook stock from the WhatsApp acquisition to today is up multiple orders of magnitude. So I don't know how the Bridge acquisition was financed, but if they receive Stripe stock to some extent, like there could be meaningful upside from there. And I know there are situations where this is back in AI land. There's a non-crypto fund. They had a small company. It got acquired by, or it merged with what ended up being Cursor. And that ended up being like the fund returner for them was like these two like seed stage companies combining together, and then it ended up being Cursor, right? So that can happen on this scale too. So I don't know what exactly happened in Bridge, but to the extent that they receive Stripe shares, like, and Stripe is up, I don't know, 2 to 3x from that, like it could actually be like a $2 or $3 billion outcome.
Yeah, I think that's a good point. I'll round us out on the winners in terms of like more specific winner. I also had Robinhood, but to not just say the same thing that Hootie said, I'll actually say Base. I think that they have done an excellent job building in the Ethereum ecosystem. I think when you look at just what they've done in terms of liquidity, mindshare, developer adoption. Like they've really cemented themselves as the one of the basically like two leading EVM chains on Ethereum. And so I think they've done a really great job there.
But
And
this
then
goes back that goes back to my incumbent point, which is that distribution's what matters. Like, what made Base special is because they had Coinbase's distribution initially, and, like, now then they got a developer ecosystem, like, what do they have, a Coinbase Developer Program, CDP, I think is what they call it, but that's how important distribution is, and then when you're, like, staring down the barrel of entering a new market and you don't have distribution, that's how hard it is.
I'd actually be curious to look at analysis of users who have gone from like Coinbase to like the exchange to Base. I'm not so certain that their distribution has been like the core driving factor versus they were just able to get, I think their brand as Coinbase allowed developers to build there and feel very confident. And so that led to things like Friend Tech, which obviously created like a speculative flywheel and a reason to be there. And that expanded other things. And so like maybe brand and distribution are coupled, but I would actually put it like I would assign more of it to the brand value of Coinbase than I would like the actual distribution of the exchange.
Yes. But it's still their ability to distribute off the brand. If they didn't have brand, they wouldn't get distribution, or maybe, yeah.
Totally.
And if they didn't have
It's a
distribution, they wouldn't have
flywheel.
the brand.
Okay, let's move on to some losers of 2025. So category loser of 2025, Alana, kick us off.
I don't know if this fully counts as a category, but I put Binance listings at TGE in that I don't know, it seems like it used to be part of the playbook and it increasingly should not be part of the playbook where teams would pay, I think rumored to be like high single digits, maybe low double digit percentages of their token supply to get listed on Binance and if like at TGE. And if you look at any of the token charts, they look down and to the right, which is not the direction you want them to go in. So I think, yeah, hopefully it's out of the playbook in the future.
Is that Binance TGEs or just TGEs in general?
There have been some good TGEs, but I think that, and this was one of my like potential picks for like category winners. Some of the new launch pads are actually really effective at like raising capital and figuring out ways to better align incentives with like longer term holders. So like a couple shout outs to give there. Our MetaDAO, I think, has done a pretty good job and had some pretty successful TGEs. Doppler that is working on things like this, and so I think like don't throw the baby out with the bathwater with TGEs. It's just like the extractive exchange listings seem down and out.
Yeah, I hear you. And I think that's a good one. I actually didn't have that on my list as I was thinking of them. My category loser, I'll mention two. I think restaking is a category loser that, as a value proposition, turned out to be like really challenging. And I think most of the major restaking networks have pivoted away from their initial versions of restaking. TBD if something like that comes back in the future, but as it was initially intended from like a shared security standpoint, I think that's been proven to be not be very demanded. And then the other category I'd put in the loser bucket is actually DePIN. I think that while the business model of DePIN is truly like the net new innovation, a lot of those companies have struggled amidst hardware costs, amidst having to like maintain those networks. And so while I think there can be some winners in that category, overall I think it's really struggled.
Yeah. I think there are a lot of losers in 2025, but I think the one that got beat down the most, maybe with maybe even no big examples of success, is gaming. So there's a ton of gaming investment happened in 2022 through 2023. And that category, as a category, it's down 96% on investment dollars. And I haven't seen any crypto games that have come out in any meaningful capacity that have grown. And I think you saw Axie in 2021, at least from a FDV perspective, was a huge outcome. And I think everyone thought that there would be follow on like that. Axie may have laid the groundwork for more infrastructure investment, a gaming specific infrastructure investment. And then you would have more interesting applications come around this cycle. And that just, I don't think has happened at all. And maybe games are now represented by something like Pump.Fun, where that is the game. It is like this financialized game, and I totally concede that point. But I think like the classical form of games just hasn't hit in the way that investors thought.
The trenches are the game in a way. The one game though that I thought had some traction was Off the Grid. I don't know where they are today, but that probably reached the most mainstream success of any crypto game so far.
Yes, yeah, I remember that launch, but I haven't heard of anything since then.
Okay, moving on to maybe some more specific losers. So whether it's a specific company, specific person, specific asset, specific loser of 2025. I'm happy to kick this one off. I put MetaMask. I, as a former Consensus alum, have been saddened to see the product in its current state. I think they've largely lagged a lot of the innovation that Phantom has done. And now, as a personal user, I've transitioned like entirely out of MetaMask into Phantom. I'm not totally sure that the mass token makes a ton of sense. And I think that's going to be a tough awakening. And you can even see like in some of their recent like product announcements, whether it's like them moving into perps on Hyperliquid, Phantom has been kind of head and shoulders of being first to the markets that matter, as well as I think building a superior product.
I feel like it's really hard to pick losers just because it means you're being mean publicly. So I went with kind of a cop out, which is Do Kwon. I think he got sentenced to 15 or 20 years in prison, something like that. So he was a loser of 2022, but it's good to finally see like the sentence being handed to him.
I copped out a little bit too, and I said Biden era SEC. Gary Gensler resigned in January of this year, and I think that looking back on it, it was just so hostile for like politicized reasons that made no sense. Obviously, that came back to bite in the form of lobbying, and now we actually have policy improvement and the Genius Act, and hopefully the market structure bill will pass, although it's been punted to next year. But in just 1 year of the new administration, you've seen a bunch of policy shift, and it almost was just like, what was all of that for? Like all of that has been reversed, right? It just burned a bunch of like legal money, stressed out founders, moved founders out of the US. And it was like all for nothing. And that administration is, or that SEC more specifically, has just been shamed since then. It's like, I wasn't, there was like some company who posted publicly that was like, we'll never hire a lawyer that if they get hired at a law firm, we won't hire that law firm if they're like a former Biden era SEC person, which like, I is a little bit petty, maybe a lot bit petty, but I'm, like, totally here for it because it's ridiculous. It's ridiculous.
Definitely a lot petty, but I think that's totally right. Three-letter agencies have had a bad year from the anti-crypto perspective. So,
I think it's
um,
actually there have been no SEC actions in 2025 against crypto, no new SEC actions against crypto companies in 2025.
yeah. The unfortunate one, though, is four-letter agencies have not been as helpful, namely the CFTC not being able to confirm someone. So I think that's been a loss, maybe in the pro-crypto regulatory standpoint, but hopefully that'll be rectified. Okay, let's move on to some bearish or bullish. As a reminder to the audience, in this segment, I say a quick statement or phrase, and then you tell me if you're bearish or bullish. You can expand on a sentence or two on why, or just leave it cryptic if you prefer. Let's start off with Base and Coinbase and Kraken's respective L2s have been rumored to be launching tokens in 2026. Are we bearish or bullish these exchange chains?
Exchange chains or the tokens themselves?
Those actually, let's go with those tokens themselves.
I'll go bearish absent any more information because the question is what are the tokens going to be used for? There are a set of things that would flip me bullish, but if you just look at it in a vacuum, I'd say bearish.
Yeah, I'm there with Alana. I think it also you have to put it in context. Kraken will soon be a public company, Coinbase a public company, and to some extent, like me as an investor, I'm sitting here, do I want to buy Base token or do I want to buy coin stock? And what is the difference? And just the fact that I have to ask that question like fractures liquidity and it confuses people. And I think there was a time where we had multi-token protocol models that I don't know have historically ever worked out, and this sort of feels like that to me, and I feel like, why should I hold base token outside of speculating on it? So, in absence of them being like, "Okay, you're gonna get some cut of the sequencer revenue or something," then I don't know that I hold it.
Yeah, I think even then that makes no sense though, right? Because like sequencer revenue goes to Coinbase equity today, and that makes total sense to me. And I feel like we just learned this lesson with Uniswap and having this divided equity token split, and now they've are on the path to rectifying that. So yeah, my only statement to Base and Anchor, please don't do it. But okay, moving on. It seems like we're all in agreement there. Next one, bearish or bullish, Bitcoin dominance holds or increases in 2026. And just for context, I think Bitcoin dominance throughout the past year has been around 54 to low 60 percentile. That has been historically high compared to previous, let's call it cycles, where Bitcoin dominance has troughed around like 35 or even high or even like mid 40s. So, Hootie, what do you think? Bitcoin dominance holds or increases in 2026?
It increases for sure. I think a lot of the reason why Bitcoin dominance has been so low over the past, call it 3 years, is just because you have this huge rise of altcoins. And if you look at alt BTC ratio, that's just been down and to the right. And I think everyone was holding out for an alt season in Q4. That never came. And I don't think it is going to come for quite a long time. You have a lot of value locked into these long tail alts, and it's a surprising amount of value, and that's just gonna have to, like, dwindle down, unfortunately, to something that's rather de minimis. Simultaneously, you have Bitcoin accumulating its grip on the market, right? You have ETFs and you have DATs. Like Michael Saylor's continuing to buy every single week. And so that just further drives up Bitcoin dominance, right? As other assets are not getting that level of attention. So, I mean, I think you guys personally know my point of view, but for the listeners, I'm fairly bearish over the next year, and I've been that way for a few months, if not more. Yeah, what happens in bearish times is like people revert to Bitcoin. They revert to the asset that is, in their eyes, the safest asset. Yeah, I think it only goes up. I don't know where it tops, but I think it only goes up from here.
Yeah, for my losers bucket, I almost put the field against Bitcoin because I think Masari came out with a report and is since 2022 of December, two of the top 15 tokens have outperformed Bitcoin. And so, yeah, I think Bitcoin has been surprisingly dominant the past year and really like the past few years. Alana, what's your take?
I'm also bullish on Bitcoin dominance increasing. To add to what Hootie said, the set of like capital that's in Bitcoin is a little bit differentiated from the rest of the market now. That you have some folks in retirement accounts or ETFs allocating that are probably just relatively passive capital, leaving it there. You have some institutions that are starting to buy as well. And so it's a combination of like less volatile capital and just a steadier, consistent allocation. I think Bitcoin is seen as its like own asset class, independent from a lot of crypto assets in the minds of many of the marginal buyers. And that'll probably continue, especially if there's a downturn in some of the other types of assets.
One thing Mason brought up is that if you look back at the top assets, like there's only two that have outperformed Bitcoin. I do think there's a little bit of recency bias there, and I do think that Bitcoin went through this binary switch of getting flows from non-crypto sources or traditionally non-crypto sources. That binary switch can also happen for other assets too. So I'm just making stuff up. I have no non-public information, but maybe someone's like, all right, I'm going to create an asset that is cash flowing DeFi protocols. And then that gets flow from non-crypto sources. That is a binary flip that could make those assets outperform. So yeah, I'm always hesitant of like recency bias being like, if this is something with LPs for the people that are listening that don't run a fund, like LPs are always like, oh, why didn't you beat asset X? And it's you're cherry picking the best performing asset is by definition, I cannot beat that asset because I'm presumably diversified amongst other things. And I was at an event in 2022 where it was like half LPs, half GPs, like only 30 people, very transparent, and everyone was like, how do we beat ETH over the next cycle? That was like, and it was like, oh yeah, because ETH went from $90 to 5,000, and so everyone's using this best asset to perform. And the same event 3 years later, everyone's saying, how do we beat Bitcoin? And so like this annoys me so much is people it's like me going to a tech focused like hedge fund manager and being like, why didn't you beat Nvidia, or why didn't you beat whatever asset was like the thing that returned? It's like you're just cherry picking an asset for me to beat is like ridiculous to say.
Yeah, Bitcoin in particular has been incredibly dominant this year. I agree that there's a lot of cherry picking when it comes to benchmarks. My only like last remaining take here is I think Bitcoin has benefited obviously from the growth of ETFs and more traditional products that have expanded the institutional investor base. I think that Bitcoin dominance probably holds here. I think it could increase a little just because you're probably going to see continued flows into Bitcoin as it just broadens as like it has reached this unique asset status. But I also think that the two things can be true. Like the entire crypto market cap can grow, Bitcoin can hold true in terms of its dominance, and that will still like benefit the entire market. So I think we're all largely aligned on that point. Moving on to another one, prediction market volume doubles in 2026. And just to maybe provide some historical context, I think the prediction market volume for this past year was around 35, 36 billion, mostly led by sports, politics, crypto, and then cultural markets in that order. And Alana, I'll turn it to you first. Are you bearish or bullish that prediction market volume will double in this next year?
I'll go bullish. I think like 35 or 36 billion of volume is not that much in reality, especially when you consider other asset classes. Additionally, when you think about all the different companies that are now launching prediction markets, like DraftKings has one, Novig is another big sports one, Coinbase is integrating with Kalshi, Robinhood has their own prediction market. The set of things, and to Hootie's earlier point, like the set of people that have access and distribution to prediction markets is just going to skyrocket exponentially. It's going to certainly go up by more than a factor of 2x. And I think it's becoming ingrained in people's behavior of, oh, maybe I started out by betting on sports, but hey, I actually have a take on the Fed interest rate markets. Or maybe I want to bet on box or office movies or album releases or something like that. Like we're going to see a broadening of both the people that are betting in prediction markets and the types of markets that get volume.
Yeah, I think it's like undoubtedly gonna more than 2x. I think you have like institutional funds going after prediction markets where they're like professionals that are generating like returns for LPs. This has historically been something where it's you're betting is on a retail basis. But you've seen that opportunity occur where people putting big size bets on will Trump become president or not, or who's his VP pick. And then additionally, you have new DeFi types of products that are built on top of these prediction markets, most notably Polymarket. There's a couple of these startups out there, and that's only going to multiply volume. So if the example is if you're in a market and it's 90% confident that it's going to close, you might take that position. Let's say your position's 100,000 in that market. You might go use that as collateral and go out and put another bet of 50,000 in another market while you wait for that one to hit completion. And that's just going to boost volume overall. I actually think if prediction market volume doesn't double, it's going to be a massive flop for next year, given how much like investment there is in the space. And to Alana's point, how many like incumbents are building there.
Yeah, I just have two words: midterms and World Cup. I think that alone probably drives a ton of volume into the space. This is maybe a more controversial bullish or bearish, but perps on private companies. How do we feel?
Yeah, bearish. It's a pretty challenging to build. There's not a clear like price feed. It's not clear how you own or retain the ownership of that company without buying or going through an SPV. There's a lot of opportunity for people with inside information to game the markets. If I know that some company has a funding round that's coming up and I'm the lawyer on the team, like I could aim the market. And I think it's actually fairly challenging to build. And I think if you look at like perps in general, historically those have only really been on the major assets before. And like now you're trying to go into like long tail privates. Sure, it'll probably start with SpaceX and Stripe and all these OpenAI and all these major companies is not really going to start at like company number 1,000, but it's still really difficult. It's like orders of magnitude more difficult than doing it on even public stock.
I will say, I think anytime there's a product that makes you grimace a little bit, it's worth interrogating it a little bit deeper. And that's how I feel with like perps on private companies right now, which there's a bunch of open questions. Why would anybody ever short something like OpenAI? Actually, there probably are people that would short that. But like to Hootie's point, it's really hard to price those as perps. You don't have dynamic information. But I do think that there is something to like many retail or even just institutional folks want exposure to some of these major private companies that are building the future of tomorrow. And the question is, if these companies never go public, how do you try and get exposure to the upside of the future? Prediction markets are actually what my best guess would be for like ways that people can get this, and that I don't think you can actually like try and price the company, but you can say OpenAI's next round be over or under $1 trillion. And then you can start to get more granularity, have people take bets like that. And there's like a whole host of like productive outputs that come from that too, in that there are actually some like ETFs emerging that take or bundle like SPVs of private assets into the ETFs. Like you can get exposure to SpaceX through some like niche ETFs. They may want to hedge their exposure. Prediction markets could be a really good way to do that. So that could be like the almost like the short side of the prediction market. So long-winded way of saying like bearish on perps on private companies, but bullish on there being more ways to get exposure to like price or growth in private companies.
Yeah, I think that's right. I think people want exposure to these companies, especially given that they've been private later and later, but unclear that perps is like the mechanism for that. But only time will tell. Okay, maybe one more fun bearish or bullish, and then we can move into some predictions. So, Avatar, Ash and Fire, the third of the Avatar trilogy, is coming out soon. There's a polymarket prediction for whether they beat their opening weekend of the previous two. So, just for everyone's listeners' context, the first Avatar in opening weekend at the box office grossed around 77 million. The second one, Way of Water, 134 million. And then if we look at the kind of polymarket odds, there's a 47% chance that opening weekend will be under 90 million for the trilogy. What do we think? I personally think that it will beat that. I'm pretty optimistic, and I think it actually has potential to rival the third one.
Do you know anybody that's planning to go and see it?
Myself, I'll just go in the corner. I've generally appreciated those movies for like their CGI and spectacle. They're like great family movies. So it's something you can all agree upon is how I'd frame it.
I feel like I'm about to get roasted for like the logical fallacy I just used there, which is like sample size of one. Do you immediately know anybody in your vicinity? Therefore, make a bet on that. I'd say bearish just because I don't know. I feel like people are tired.
I don't really have a great opinion, but I'm so bad at pop culture. One question I would ask, is this on an inflation adjusted basis or not? Because I think probably ticket prices have doubled. I don't know. I don't even know when the last one came out, but maybe they've doubled since then. And I don't know. Maybe people are going there now, have money, so it's like somewhat nostalgic. Avatar came out when was in college or high school, maybe, and so I don't know. There's some nostalgia value. I'm bullish. Why not? What do I have
Yeah,
to lose?
I love it.
I'll
Yeah,
take a
there's
long
nothing
on
on
this.
the line.
I'll punt long.
Amazing. Okay, let's get into some 2026 predictions. I will, whether you have category predictions, specific predictions, or more high level predictions, all are welcome. Hootie, I will toss the mic to you first for predictions for 2026.
I think my overarching prediction is that crypto is going to get hard again. And this was reminiscent to crypto in 2015 and 2016, and maybe reminiscent of crypto in 2018 and 2019, where there were different risks to the industry, but significant ones, like for sure, like 2018, 2019. I remember being like, there is a significant chance that this industry just gets shut down. There's some law that comes out that says you just can't, by any real means, like own crypto. And I think we're going to go through a similar era. I don't think the risk is going to be regulatory, but I think it's going to get hard again. I think that there are a lot of venture funds that are probably not going to return even 1x their fund. I think they're going to struggle to raise. They already are struggling to raise. I already know of a handful. Yeah, I have 30 catch ups a month with other venture investors. Like, I already know of a handful of funds that are not raising another fund. And even the big funds, most of them are downsizing in some meaningful capacity. So the space is going to be capital constrained. I think we went through an era of 2021 and 2022 where it was really easy to raise capital. It also attracted mercenary founders, and obviously investors are to blame, right? We're the ones that funded it. But those mercenary founders really made it seem easy, or grifted capital, or launched products that didn't really do anything. And I think we're just going to go back to a time, and this pendulum just swings naturally, right? I'm not saying that, but people are going to respect the capital that you give them, and they're going to do more on less capital, and they're going to be founders who are probably more missionary than the founder set that we have today. And there's going to be fewer capital sources around, and you're going to go to a conference, and instead of seeing KOLs and Lamborghinis and all this crazy stuff, you'll probably see people who are genuinely curious and will put their own time and capital on the line to achieve something, as opposed to saying, all right, I'm going to do this for 2 years. I'm going to launch a token at a $500 million valuation, but I'm going to sell a bunch of OTC right before. And I think that has like damaged our industry a lot. And not to say that happens in other industries, probably happening in AI today. It happened in other bubbles before too. So I'm not to say it's unique to crypto, but what is consistent across all of those bubbles is that it goes back and it gets really hard again. So
Interesting. When you said crypto's going to get hard, my initial thought was not bear market hard, like
you
less
got a
funding.
different thing on your
My
mind,
my
maybe.
initial thought was maybe it's going to get hard from, and this may be from the perspective of a venture investor, that more incumbents are going to do well. And so therefore there's going to be less of the pie for like crypto native startups, or that you're going to see the Sequoias, the benchmarks move back into the space because it's now becoming like fintech adjacent. And every fintech investor is now a crypto investor. And therefore, like that's what almost makes it harder. I wasn't anticipating the conferences will be fun again because there will be less people and more serious builders.
Yes, incumbents will have some force, but there will always be innovation too. And I think what happened in 2016 was Ethereum launched and you had a design space where you could create new products. Like we need someone to come up with, I don't know what that is next, but someone to come up with that next and for it to create a new interesting design space and hopefully use decentralization such that any one incumbent can't take it over. And that's going to happen and they will create amazing returns for whoever finds that opportunity and funds that opportunity. And hopefully it's an environment where they're not raising their seed round at $10 billion or some crazy number. It's doing it at some reasonable amount so it doesn't have an upside down capital stack. But to the point about incumbent venture funds, I still think a lot of incumbent venture funds like don't really see the returns necessary in crypto to return their funds. Like if you're talking about Lightspeed just raised, I think like a $9 or $10 billion fund, right? To return $9 or $10 billion is a lot. And there has not been, short of Coinbase or maybe Circle in its early days, Circle has traded down quite a bit, but there has not been an outcome that could warrant a return of that magnitude. And all of these funds are still largely distracted with AI. A lot of Lightspeed specific vehicles, underlying vehicles within that are AI specific. And they're looking at AI startups and they're growing at much faster rates than crypto. I'm not as worried other funds coming in the space, to just be completely honest. But I am, and I'm not really worried that crypto is going to become a constrained category. I actually think it's a great opportunity if you have capital.
Yeah, absolutely. Alana, predictions?
I think we're going to see more crypto companies go public, like on stock exchanges, and that'll be a very good thing. I think there's a set of like late stage crypto companies that have just sort of been waiting for their moment now that the regulatory environment is a lot more favorable and the IPO window is open. And we've seen some of the recent IPOs be relatively successful just from like a capital raising perspective. We'll see a lot more of those in 2026, maybe 2027. I also think Gemini gets acquired by somebody. It's trading at like $1.5 billion market cap, maybe a little bit less. It's not the leading exchange in the US. I don't know if it's in the top 5 leading exchanges in the US for crypto assets, but they have a bunch of licenses. And so I think they're like an attractive acquisition target for somebody and they're like within the bounds of what somebody may pay, especially if it trades down from here. The second order effect of more crypto companies being public and having like high like mark to market stock prices and just like more cash on the balance sheet so that they can also do a lot more acquisitions. So it's like the incumbents get stronger, but it does create more opportunity for a lot of the teams in crypto that don't necessarily want to launch a token, but may not have the sort of capability to go all the way to an IPO to still have a really attractive exit opportunity and keep and compound those people within crypto, which I think is like a really incredible thing.
There's also a distinction to be made between incumbents getting stronger via acquisition versus incumbents getting stronger via launching a competitive project internally, right? I think at least I'll speak for myself. I am pro incumbents getting stronger via acquisition, right? That is like that's this whole feedback loop that allows us to raise new funds and go invest in innovative founders. Incumbents creating competitive products to neutralize innovation is like what I'm against, right? It's this build versus buy thing. Yeah.
Yeah, I think we've generally seen a lot of pro acquisition. I think it's just becoming more possible now that crypto has more regulatory clarity. This year obviously had probably the most acquisitions that we've ever seen. I think next year will likely be a solid year for acquisitions as well, just given that you also have more public companies and they'll want to do more M&A. I think one of my predictions is similar to Alana's, but on the flip side is that I think we'll see a greater like really explosion in crypto ETFs in 2026. Obviously, the SEC passed the generic listings standards that allow ETF issuers to more easily launch ETFs under a generalized rule set. And I think that will lead to more ETFs that are going to be multi product, single assets. And I think that will expand the aperture of what your what your general investor can get access to. The other, I would say, like less confident prediction, but like one that I'm mulling over and would be interested to hear the reaction is the Fed chair replacement is looking like it's going to become more of a nothing burger because 11 out of the 12 Fed Reserve members were already reappointed for next year. And so what that means is that even if we get a new Fed chair who is ideologically aligned with slashing rates, might not have as much of an impact as currently thought.
My thoughts around the Fed chair is that maybe that is priced in to some extent, right? We've seen rate cuts occur. It's not like crypto is ripped post rate cuts. I think crypto is going through its natural cycle, right? You're having the sell off that occurs. People are coming to the realization of what are they actually holding? Why are they holding it? How much do they believe in that asset? And that sort of dwindles down. And although I don't know, like rate cuts are important for sure, right? Liquidity, but at least in this short term, it hasn't been like very impactful. I think people are calling for rate cuts, rate cuts, rate cuts. Like that's like the bullish side of the argument for 2026. And in my mind, I'm just, all right, like
Priced in,
we all
maybe.
know it's like coming. I don't like, okay, shouldn't like the smart money be backing up the truck? Why is smart money super bearish right now?
Yeah. Yeah. Fair. Any final predictions for 2026?
I think the Bears are going to win the Super Bowl.
That's a bold take. Chicago native believing the Bears are going to win the Super Bowl.
What's the poly market odds on that right now?
It's probably pretty low.
Chicago Bears have a 3% chance of winning the Super Bowl.
Better than 2%.
All right. Well, thank y'all for coming on. Here's to hoping for a great 2026 and the Chicago Bears winning the Super Bowl.